What's going on, everybody? My name is Zach Hartley and welcome back to another video. In this one, we're going to compare Coursera and Udemy stocks. They both just recently reported their Q2 earnings and financials. And so in this video, we are going to break down all of the most important metrics and stack them side by side to see which one is a better investment and a better fit for our portfolio. Here we go. Okay, so before we get started here, let's just have a quick conversation about Coursera and Udemy and their business model and what they actually do. Both companies are selling to both consumers and businesses, and so they have a variety of different customers, but where they differ is that Coursera is partnering with institutions to bring in their coursework, their teachers, and their reputation behind the Coursera name and offering those programs online. Udemy is tackling the problem a little bit differently. They're selling courses that anybody can upload to the platform. So for instance, I even have a couple of courses on Udemy that I sell on the platform. I cannot sell any of my courses on Coursera though, because I am not an institution that they're willing to partner with. And so those are how the two companies kind of go about creating an online learning platform with slightly different strategies. Now, the reason that I like this trend is because it has a couple of different factors that are contributing to what I think is going to be steady and consistent growth over the next 10 to 15 years. Number one, remote work and remote learning has accelerated because of what has happened over the past few years. More and more people are able to learn a skill and gain employment from home by learning that skill and then using it and applying it in the real world. I think that is going to spread across the globe, and these types of companies are going to support that and be the beneficiaries of that. On top of that, high-speed internet is becoming more and more accessible around the globe. We have Starlink that is breaking borders all over the world. We have Amazon that is launching satellite internet as well. We have high-speed internet on most mobile phones, which means most people will have access to the products and services of Coursera and Udemy. And then probably most importantly is that the cost of post-secondary education is rapidly outpacing household income. The cost of college is going up way faster than people are earning money, which means they're getting priced out of the education market, and so alternatives like Coursera and Udemy start to become extremely attractive. Now, anytime that you evaluate a company, you need to make sure that you are comparing the most important metrics. In this scenario, we are comparing two companies that are growing extremely fast, but neither one is profitable. Neither one is generating a profit and sending it back to shareholders right now. They're raising money right now, and in some cases, they're even diluting shareholders in order to have the capital to grow fast and capture market share. That is the strategy that both of these companies are going after. So if that does not fit into your portfolio, and if you're not looking for a company that's probably a little more high risk and high reward, then these two companies might not fit in. But for me, this is what I like, this is what I am evaluating, and these are the metrics that I have chosen to evaluate for these two companies. First of all, we have the market cap. This is just the size of the company. It doesn't necessarily mean anything good or bad. It just kind of puts things into perspective. Coursera is $2.37 billion. Udemy is worth $1.58 billion. Now, when it comes to the price to sales ratio, this talks about how much revenue the company is bringing in relative to the market cap. And for Udemy, it is a lower ratio, which is a good thing, which means we are getting more sales for the price that we are paying for those shares. With Coursera, it is 4.08, Udemy's 2.33, so almost half, which is very, very nice to see. And that means that Udemy is selling at almost twice as good of a valuation relative to the sales that the company is bringing in. It only focuses on the sales, so keep that in mind. That's the first metric that I thought was important, and Udemy kind of wins that. When it comes to revenue in the last quarter, Udemy also put up larger revenue numbers, and so they're worth less money, they're valued at a more reasonable valuation relative to sales, and they brought in higher revenue than Coursera, and so that I found very interesting. However, probably one of the reasons that Coursera is valued so high is because they're growing very quickly. They're actually growing faster on a quarter-over-quarter basis as well as a year-over-year basis compared to Udemy, and so that probably gives them a bit of a premium in the marketplace. They also have a more healthy balance sheet coming in at a 2.94 current ratio. However, there is a certain metric that we are going to talk about at the bottom here that really impacts this balance sheet and the current ratio, and so in reality, this factor right here of current ratio isn't actually that important, and we're going to talk about why in just 1 minute. After that, we have cash flow from operations. Honestly, both of these companies are kind of plus or minus $20 million, depending on the quarter, and so I put both of them at sort of break even. Realistically, it just depends on what quarter you are looking at. When it comes to gross profit, this is where the companies really start to separate and where I really started to find some divergence here. Number one, Udemy is generating a significant amount more gross profit, about 25% more gross profit than Coursera is. And then their margin is higher, but what I found was the most interesting and probably the most important stat on this entire spreadsheet here is that the gross profit year over year growth with Udemy was 17.1, but with Coursera is only 1.5. And what that tells us is that as the revenue increases with Udemy, their gross profit is still fairly healthy and it is growing over time. But as Coursera increases their revenue, their gross profit is not increasing at nearly the same rate, which makes them further and further away from profitability. And so that is a metric that I did not like at all with regards to Coursera, but I thought with Udemy, it was at least in line with my expectations. When it comes to operating income over the trailing 12 months, both of the companies have lost money. Udemy has lost just slightly less money. They also, in their most recent financials that came out, they forecasted higher revenue of $712 to $720 million compared to Coursera's $617 to $623. Now, like I mentioned before, the current ratio wasn't super important here, and that is because these are software companies, and one of the metrics that they have to report on their balance sheet is deferred revenue. Deferred revenue is an extremely important line item, especially for software companies, because what it means is that if a company comes in and they buy a 1-year subscription, but they are now in month 3, it means that you have 9 months worth of their cash for services that you have not given to them yet. And that cash actually sits on the balance sheet as a liability under deferred revenue. And so basically it's a customer deposit that they have already paid you. They've already accepted that they're going to pay it to you. You just need to deliver on the software or the service or whatever it might be. And so in reality, a larger deferred revenue number is going to be very good. However, it sits on the liability side, which is going to make the current ratio look worse. And so this is what I meant by the current ratio might not necessarily be reflective or representative of the health of the companies. Because for instance, if I had a software company like Udemy or Coursera, I would want as much deferred revenue as possible because it means that customers have prepaid for services. I've got that revenue locked down and I've got customers lining up at the door to get my services. I want that deferred revenue number to almost be as high as possible. But in that situation, it brings down my current ratio and it makes my balance sheet look less healthy at first glance until you dive in and you really understand what deferred revenue is. And so when we look at this on a fundamental perspective, these are the metrics that I think are the most important when it comes to Udemy and Coursera. And I think Udemy kind of wins in most of the categories that I am looking at right now. When it comes to the actual technical analysis and the stock chart, Udemy is super important. I think we have some major support here right around $10. We did drop down to $8, but ever since then, we've been setting higher lows, consecutive higher lows, which I think is very nice to see. It looks like we do have some resistance at $12. So right now, we're sort of trading in a little bit of consolidation. I do have a position in Coursera. I do have a position in Udemy. I have a stop loss set just below $10. I like both of these companies long term. I am hoping that Udemy goes through this consolidation and breaks out to the upside. If not, I'm going to exit my trade, take the small loss, and try and buy back in later. When it comes to Coursera, after they reported earnings, they actually gapped up by 22%. So we are doing extremely well on Coursera so far, but it does look like they are hitting some resistance right here around $17. So I'm going to have to watch that one extremely closely. But as of right now, it does look like, similar to Udemy, we have started to establish a new bullish trend, which is confirmed by a crossover of our different moving averages, a breakout of previous levels of resistance, and consecutively higher lows. Very nice to see. If we break through 17, that would be another very bullish sign. Now, in summary, here's the verdict. Both of these companies, in my opinion, will do extremely well if they just continue on their current trajectory. Udemy, as of right now, seems like the better deal at the moment based on current metrics and revenue and prices. I just think it's kind of checking the boxes a little bit more than Udemy is for me right now. However, the stock price has not performed nearly as well as Coursera has, at least over the last few weeks. Both stocks, though, have major support and major resistance levels that I think as swing traders and long-term investors, we should be able to capitalize and we should be able to use. Now, if you're interested in learning more about how to do that and how to do research like this,
definitely check out my totally free stock market fundamentals course. This course has had over 18,000 students. There's over 420 reviews for you to take a read through, and over 2.4 million minutes of watch time have been spent on the course. It's 10 hours long, so you can do it in a weekend, and I promise you it'll be the best free resource that you can find online. Thank you guys so much for watching my channel. Thank you for watching till the end. Please consider hitting that like and subscribe button. I sincerely appreciate it. And we'll see you in the next video. Good luck trading, good luck investing, and we'll talk to you soon.